So, good morning, good afternoon, good evening, ladies and gentlemen, boys and girls. Welcome to this amazing session of Management Accounting, paper number 12, CMA Intermediate. So, my name is Sumanth. I am a qualified chartered accountant. I have cleared all my CA examinations in very first attempt. So, over and above that, I am a very good. I'm very good at cost accounting and management accounting. I have scored 96. Yeah, you heard it right. I had scored 96 in my CA Intermediate cost accounting. So that made me to teach management accounting and inculcate all those things which I had made to pass it on to you guys to make it a better future for you guys to learn management accounting. So gentlemen and ladies and gentlemen, I welcome you once again for this session. So I will be taking you management accounting, that is the paper number 12 of CMA Intermediate. So before going through all the chapters, let's have a basic overview of all the syllabus of CMA Intermediate Management Accounting. So this is the index of our course. In this we will be going to learn all these chapters in detail with examples, with conceptual understanding and all those things. So let's get started. So coming to the first chapter, we have Introduction to Management Accounting, where we'll be having, basically this is a theory chapter where we'll be dealing with the introduction of management accounting. So next we'll be going through the activity based costing. What is activity based costing? What are the formulas of activity based costing? Why activity based costing? Why there is a shift from traditional to activity based costing and all those things. Then we have the decision making tools. First of all, we have the marginal costing. What is marginal costing? What are the various formulas we will learn here? Is that the PV ratios, the income statement, the marginal ratios and all those things. Next we have the application of marginal costing in short term decision making and those things. Next we have transfer pricing. Transfer pricing is something that if there is a transfer between one department to another department, one company to a company, intercompany transfers and all those things. Next we will go to standard costing and variance analysis. Here we will be comparing the standard with the actual cost. If there is a variance, why that variance for all the material, labor, overheads and sales. Next we will be going through the forecasting, budgeting and budgetary control, where we will be learning about the budget, the cash budget, the flexible budget, the preparation of the budget and all those things. Next we will be going through the divisional performance management. Here we will be making the performance management, having some tools like the target costing, balance scorecard and all those things. So next two chapters are basically theory chapters, where we will be learning about the responsibility accounting and decision theory. So this is the index, guys, which we will be learning in this particular course over the time. So I will be helping you guys to learn all those things with the practical examples, with some insights for your examination, for clearing every paper, not only management accounting, in your very first attempt if you are writing. So the thing required from you guys is that please revise daily. The concept which we have done today should be revised on a daily basis. Please go through the sums. We'll be covering almost 90% of the study material, and the homework given may be of the similar type or it may be a basic ones, not the larger problems, question papers, all will be covered in this class itself. So there will be no further action required except revising and doing the problems on a daily basis and revising. So we have covered our index. So let's get started with our chapter number 1. So the first chapter is that we have going to the introduction of the management accounting. What is management accounting? What is the relationship between management accounting, financial accounting, cost accounting, the evolution of management accounting, the users of management accounting, the scope of management accounting, the role of a management accounting in modern business unit and all those things. So guys, this will be our content for management accounting. I request each one of you to go through the syllabus. At first, please understand if there is similar kind of topics which were covered in group 1, maybe BCom and all those things. So now coming to chapter number 1, Introduction to Management Accounting. So yeah, coming to this chapter, we'll be having basic theory portion in this chapter. The weightage is less. If you see, the weightage is, so we'll go through the weightage as well if you want to. So the weightage is, when we come to the introduction, when we go to the theory part, it's 5 in the first chapter, 5 in the first chapter, 5 in the 9th chapter, and 10, around 20 to 25 marks we will have theory portion. Rest we will be having theory plus practical or full of practical. So now going to the weightage of the marks. So if you come to the first chapter, it's 5 to 10 marks. Maybe they have given 5%, it will be around 5 to 10 marks. If you go to the activity based costing, we will be having one question of 10 marks to 12 marks. So they have given weightage as 10%. If you go to the third chapter, which is the decision making tools, we will be having 3 chapters in that: marginal, application, transfer pricing. All these 3 including will be having around 30%, which is 30 to 35 marks. So rest all chapters will be around, every chapter has its specific weightage. So I request everyone to not to skip any chapter, including the theory chapter, as we are having theory of 20 to 25 marks, where it will be asked in fill in the blanks, choose the correct answer, maybe true or false. So going through after the weightage, so you will understand the importance of every chapter. Now we are in a position not even to ignore a single chapter, whether it is theory or practical. So we will be covering everything in this particular class. So the only thing, as I told earlier, is to, from you guys, is to learn everything, understand the concepts and revise. Revising is the only tool to remember all the things during the examination. Okay, so going to chapter number 1. Yeah, so in this particular chapter we will be understanding conceptually what is the meaning of management accounting, the uses and the scope. Next we will be having the relationship between management accounting and cost accounting with the management accounting. So then we will be having management accountant role in the modern business world. What is his role in this particular 21st century during the time of globalization and liberalization. So introduction. Before going to the management accounting, let's understand the concept of accounting. What do you mean by accounting as per your knowledge? Please think for a while and please do recite for yourself in front of this camera. So I hope everyone has recited the meaning of accounting. So what is accounting? Accounting is the process of keeping records of the financial transaction. As you can see, in accounting we'll be recording only the financial transaction. What is financial transaction? Financial transaction is nothing but which we can measure in terms of money. It should be quantified. That is accounting. That are the financial transactions. So basically the meaning of accounting is that accounting primarily means process of keeping records of financial transaction. We will be only tracking financial transactions. So the end result of accounting is that we have to find 2 things. One is the financial position, one is the financial result. Financial position is that the balance sheet. The financial result is the profit or loss for a particular period. So next, coming to who are the users of accounting? Who will be the users who is interested in the financial transactions or the financial accounting? First one will be the owners or the investors. Owner is a person who should start any business. Why does he require information? He has to understand at a particular point of time whether the company is making a profit or a loss, or whether can he run for business for a specific period of time. He has to know the position of his assets and liabilities as on a particular date to determine whether he is doing a good business or not. Then next we have management. Management is completely different from owners. Management is in a company will be only concerned with the decision making. The decision making whether to expand a business, whether to purchase a new company, or declare profit to the investors. Owners in the sense, it will be shareholders if it is a company, partners in case of a partnership firm, proprietor in case of a sole proprietor, designated partners in case of an LLP. So the owners are different from management. Management are the person who actually run the business. So they are concerned with decision making. That's the reason they would be requiring information. They would be requiring information for their decision making tools. Whether to make a company better is concerned only with the management. Management has the power. Where owner has the right, but the ultimate job is done by the management people. So now if you go here, for owners, the primary objective is to provide information to the owners relating to their business. Information in the sense profit or the financial position. Or the shareholders of a company are interested in the accounting information with a view to ascertain the profitability and the financial strength. As I told, profitability is very much concerned for the owners, as the purpose of investment is to earn profit. Every business, what we are doing is for the purpose of earning profit. Do we make any business for making loss? No, there is no such business. And the financial strength is nothing but the value of assets and liabilities as on a particular date. We have to have assets, we have to have more assets rather than liabilities, so that your business is sustainable. That's the thing. So management, there is a separation of ownership and management function. As I told, business is separate and the owners are separate. The management required, which helps them to make internal decision making. As I told, the purpose of financial information for management is for internal decision making. Next we have creditors. Who are creditors actually? They will be, creditors are those person who will be giving maybe goods to the business which we will be using it in our production. If suppose we are making loss and we are not able to make the repayment as on due dates as specified by the creditors, it will be a bad debt for the creditors. Since that's the reason creditors will be making a clear assessment of our company, whether we are financially viable to make payments to them, whether we are financially stable, do we have enough cash at bank or cash in hand to repay all the outstanding dues to the creditors. That's the reason creditors are also interested in financial information. Next, the regulatory authorities. In India, we have regulatory authorities like the income tax. We have income tax, we have GST, we have SEBI, we have RBI. These are the four major agencies in India who will be looking after every businesses. So IT department, why does IT department require our financial information? Whether have we done any fraud? Are we making business as per the income tax laws? They will be looking at a business, whether a particular business is making or running the business as per the income tax law. Are they claiming any deduction, wrong deduction? That's the reason income tax will be more interested in our business. GST department, whether the particular business entity is paying GST, are they making any fraud, are they claiming any wrong input tax claim credit, and all those things. Now SEBI will come into picture if some business entity, not business entity, the company is listed on a stock exchange. We have, for example, we have Reliance, we have the Tatas, we have the Infosys, we have some government companies as well, like the IRCTCs and all those things. So SEBI will check whether particular accounting of a company, listed company, is as per the standards. So SEBI will be having certain standards. The companies listed on the stock exchanges have to follow the SEBI guidelines. That's the reason these are more interested. RBI. Next, RBI is a monetary authority. In India, the monetary policy can be done only by RBI. So RBI thinks that if a particular company is taking funding from outside India, whether is it following FEMA in the sense Foreign Exchange Management Act and rules, whether they are following that and all those things. So regulatory authorities are very much concerned because the business should be as per law. There should not be any single percentage of deviation. If there is deviation, like we will be having IT raid, GST survey, GST inspection and all those things. So regulatory authorities, various government and other agencies use accounting information not only as a basis for tax assessment, but also for evaluating how well the business are operating. So regulatory authorities, they are mainly interested about assessments, whether he is paying tax, whether the profit is correct or not. Over and above that, they will be checking how well the business is operating. See, these are the authorities of government. Government also wants to give some scheme, no? They will be giving some schemes to the business entities through these entities. There will be certain schemes which will be given through these entities, which you will be learning in their respective subject. If I tell now what are the schemes, it will go over the head. That's why. Now government. See, government requires information because, as I told, this point is linked to the regulatory authorities. Government will have certain schemes like the Startup India and all, and many more schemes are coming like the Mudra. These schemes are based. They will make this scheme in such a way that they'll be collecting information from all the business entities. They'll see what does a business require. See, in Mudra, they'll be providing loan. Government saw that small entities are not getting loan from the banks. That's the reason they are giving Mudra loans. So, in the same case, Startup India, they'll be giving extra benefits. They'll be having some tax concessions, tariff concessions, and all those things. Next, we have the potential investors. These investors is different from owners. If suppose they will come into picture when ownership is transferred. If suppose I will take an example and understand this. So we have a company X Limited. So they are having 10,000 shares. Okay, now they do not have cash. They have burned all their cash reserves and they are waiting for a funding for business expansion, not for routine business. If there is for routine business, the investors will think twice whether to put money or not, as the business has already completed the cash. They have already used the cash and they are waiting for cash for the purpose of running the business. There may be a problem, but investors are more interested if they are expanding business. If expansion is, see, if a company is expanding, we can take two types. It is making profit or it is going to capture a new market. Both are good, no? That's the reason investors are more interested if the company is into expansion or capturing new market. So coming back to the example, X Limited has 10,000 shares. It is wholly owned by Mr. X. If suppose Mr. X, he wants money, he'll go to the, I am considering this as a private company. So private company, we can transfer the shares to private placement. So now he is going for a private placement and transferring shares to Y. Say Y of 5,000 shares. Now the ownership is transferred from X to Y. But Y, while investing, he'll make a detailed analysis of the company. He'll take all the financial information. He'll see the profit track record of the company. Whether if I put my money, is it viable? Can I earn profit? Will there be a good return on investment on my investment which I have made in the company? That's the reason potential investors will be requiring financial information. Then employees. So why do you think employees require financial information if they are getting salary? See, anyhow, employees will be getting salary on monthly basis. If the company is in loss or profit, it doesn't matter for them. But in this point, they have given employees. Why do employees require fund? So it's like this. In companies, what they'll do, they'll give salary as two types. One, they'll give it as fixed. One, they give it as variable. So fixed part anyhow will get. That variable part depends on the profit of the company. They will be telling that there is a profit sharing. Company nowadays are using profit sharing. They are not using the term variable pay. So that profit sharing will depend on company's profit. For that, employees will be working for the profit of the company. Every employee should work towards the profit of the company. That's the reason employees are very much interested in the financial information. If suppose you are now a qualified CMA, now you want to join a company, first thing is you have to check the financials of the company, because if it is a loss making company, if you join tomorrow, there are chances of layoff within 1 year, maybe 6 months. That's the reason employees are very much interested in financial information. Next we have the researchers. Who are these researchers? These researchers are those university professors, maybe academicians. They will be having, they'll do some research on a particular company, telling that this for their thesis, maybe for their thesis, for example, to the student, they will be making detailed analysis for their, see, in their research, in the as well as business affairs and practices. So certain company will have certain practices, those can be taken as an example for the students, those can be taken as a concept in a chapter. That's why researchers will be requiring the accounting information. So these are the persons who will be requiring the accounting information. Who are those? Owners, managements, creditors, regulatory authorities, government, potential investors, employees and researchers. These are the persons who will be requiring information. So going to the next part. So there are 3 branches of accounting as per the rules. So financial accounting, cost accounting, management accounting. In financial accounting, as we learnt earlier, we will be only concerned with financial information. That is, do we have profit? Are we sustainable? Do we have enough assets and assets to meet the liabilities? Are we in a good position? That's the main agenda of financial accounting. The end result is, as I told, 2 things: financial position, financial result. That's it. So now, so accounting information. So we have 3 levels of management, no? Top level, middle level, lower level. Who will be requiring accounting information? As per the above users, I think everyone will require accounting information. Okay. See, though the financial information need of 3, they will vary. The financial information requirement depends on the level. Top level will be requiring everything, since they are the decision makers. Middle level, they'll just pass on the information received from the top level management to the lower level management. They'll be requiring less, but the lower level employees they will be concentrated for something. Suppose purchase department, their duty is nothing but to purchase at a lower cost but at a better quality. Sales department is to make more sales, so they are not concerned with production. No, production department is only concerned with production. Sales department, they will tell that this customer has arrived, I want this much quantity of goods. That's it. It is the responsibility of the production department who should produce the goods as in time. The sales department is not concerned with the production. So we will be having 3 types of accounting: financial, cost and management. What is cost accounting? Cost accounting is that in this particular accounting we will be only concerned with cost calculation, cost reduction, implementation of cost reducing techniques and all those things. So next we have management accounting. So management accounting, we will be going in detail in this particular subject. We will be having all the tools, we will be learning all the tools and techniques which will be useful in real life scenarios actually. So we can implement this management accounting in real life scenarios in the companies and all. So what is management accounting? So management accounting, as the word says, we have 2 things: management and accounting. Accounting we have learnt. What is accounting? It is financial transaction, but it is also will include audit and all those steps. What is management? Management is nothing but managing the people. Why do we manage people? To attain our goals. What is our goal? Our goal is to earn profit, be in a better position, achieve our strategic goal. Every company has its goal. It may be profit, it may be wealth maximization, or capturing new markets. The main 2 agenda would be profit maximization and wealth maximization. So if you read it here, management accounting has 2 terms. So now if we go to the definition, management is all about running the organization in consensus with the strategic goal. The management is nothing but we have to make people to achieve our goals. It is our it is our responsibility to make people work towards achieving our goal. But we will be incentivizing them. We will be providing some benefits for them. So traditional accounting roles of stewardship, control and audit, these are only concerned with accounting. So management accounting is nothing but accounting for the management. So management requires both qualitative information, quantitative information. That's the reason management accounting includes everything. It is a larger picture. It includes cost accounting, it includes financial accounting, it includes other qualitative information. All those things are included. So now, what information will be included? It will be include financial and non-financial, as I told. So management has to take into consideration all those things for decision making. Suppose if it want to expand, it has to take into consideration the marketplace. Are we in a position to dominate the particular place? Like how Jio dominated in telephone sector, are we? Do we have the power? Do we have the resources? Do we have the resources? No, we have to have the resources to acquire a particular market. Do we have the infrastructure? All those matters in decision making, that is included in management accounting. That's the reason management accounting includes is a larger picture. It's a bigger bucket having everything. It will include every part of the business. So the information may be financial or non-financial. Next, it will be based on past, future and present. So management accounting takes into consideration the past information. So it will accumulate, it will make a detailed analysis of the past information for the purpose of decision making. So decision making will be for the future prospects. For future, whatever decision we have to make, but it will be based on past information. So we will be making detailed analysis of past information, any new techniques, all those will be included for the future decision making. So management accounting may be a detailed one or an aggregated form. Detailed one in the sense we will be making detailed analysis. Aggregate in the sense we will have an eyes view, bird's eye. We will be having an overall view of the business condition and make a decision. So who are the persons included in management? It includes senior managers, mid-level managers, lower level managers and some executive directors. So as the word denotes management, it will include all the managers. See, in a particular business, we cannot make a decision ignoring the lower level manager, because he is the grown person who will be executing the things. He will know the problem at a lower level. So that's the reason we have to include all the employees at all levels for decision making. Now we'll come to the uses of management information. So management accounting helps us to take decision making and formulate a business strategy. So what is business strategy? We will be making a strategy. Strategy is something, but we will make a plan in advance for something. It may be expansion, it may be taking a new company, it may be reducing the capacity of the business or increasing the capacity of the business. So and it may be a long-term decision like purchasing a machinery. Should we buy it full cash? Should we buy it on EMI? Even if we are purchasing some big thing, we will be making some decision, no? Whether to purchase it on EMI. See, car, nobody will go for full cash on car. If it is bike, some will go for full cash. If it is mobile worth up to 50,000, maybe 20,000, they'll go for full cash instead of going for EMI. Those things are helpful. So that's the reason management accounting comes into picture. Next we have plan long-term, medium and short-term operations. See, we have to make three types of decisions. One is the long-term. Long-term decision includes the purchase of plant and machinery. We should purchase plant and machinery for our production, right? For purchasing it, the cost may be high. It may be 2 crores, 3 crores, maybe 10 crore. So we have to make a decision. For that, management accounting helps. Whether we have to buy a machinery or rent it out. We can take it on rent. No, the machineries can be taken on rent. So we have to check whether we have to take it on rent or purchase, because purchase includes we have to make the monthly installment. In case of it is rented, we have to pay the rent. We have to make a analysis whether to buy or rent based on the rental payments and the installment payments. We have to have a detailed analysis of it. Next, we will be having determination of capital structure. So capital structure is nothing but we will be having two types of two types of funding. One is equity, one is debt. We have to have a perfect combination. We have to have a combination that which is very much helpful for the company, because in equity we have to pay dividend, but there is no requirement of paying dividend. No, there is no law that we have to pay dividend, but dividend we have to pay to make the investors happy. That's the reason we pay dividend. But in case of debt, if you are making profit or loss, you have to pay the interest payouts. That's done. The debenture holder or the bank person is not concerned about business, but they are concerned about the interest payments. They have to receive their installment on time. That's the reason management accounting comes into picture. It will help us to make a good capital structure, a perfect capital structure. Next, we will be having design reward strategies for executives and shareholders. So design reward strategies in the sense, what is that? So we will be making some strategies to reward the executives and shareholders. For executives, it is like we will be incentivizing their work by making ESOPs. ESOP is something but company share. We will be providing company share to the executives as a variable payment. Maybe a particular person has done a particular job, so from that the company has earned more profit. To incentivize that particular executive, the company may give him company shares at lower than market value. These are called ESOPs. To shareholders, will be paying dividend year end. In between also we can pay dividend like interim dividend, maybe buybacking at a price more than the market price. These are the reward strategies. So inform operational decisions. Operational decisions in the sense to purchase the goods at price which at a price where the company can make profit. So the production department may tell that please set the price at this much, maybe 100. The purchasing department may purchases at 90, but the same quality of goods. So this is a kind of profit to the company. So purchase department is doing good because they are purchasing goods of same quality at lesser price. It is good for the company, no? That's the reason. Next, we have efficient use of resources. Actually, this is a very important concept in company, because efficient use of resources in the sense there should be zero wastage. Any wastage is a loss for a company. That's the reason the resources should be used effectively and efficiently. The output, by using the goods, we have to create such a output that it matches with the quality standard. There should be no variance from what it was actually expected. So we'll set a certain quality standard. It has to match with this. There should be no deviation. If there are deviation, there are chances of rejection of goods from the customer. So in that case, anyhow we had produced, that is loss, and over and above that we will be having other losses like warehouse, transportation and all those things. So this is very important point. Measure and report financial and non-financial performance to management. So management is concerned with decision making. For that they should have information, no? So management accounting gives information to the management. It will be financial, it will be non-financial, to the management as well as other stakeholders like the creditors and all. So management accounting gives both the information, financial as well as non-financial information. Next, it will be management accounting safeguards tangible and intangible assets. So safeguarding our asset is important. No, see, if there is a goods, maybe stock or a plant and machinery, a particular part of a plant and machinery is very costly. Maybe if someone tries to take it out, or the particular is robbed by a particular employee, there is a loss to the company. No, that's the reason we'll be having controls in the business entity like the CCTV and all those things. So Colin Dury states that management accounting combines accounting, which is the finance. So these two includes financial accounting and management, with a leading edge technique needed to drive successful businesses. Professionals in this discipline are functionaries who. So what is the role of management accountant? They will be like advising managers about the financial implication of project, whether the particular project gives us profit or loss. Explain the financial consequences of business decisions. So we have made a decision that we will be purchasing plant and machinery on credit and we will be paying it through installments. So it will have an impact on business, because since we are paying installment, the installment would be high. This blocks the working capital. So this much of amount will be blocked in working capital. We have to pay it monthly. So that amount could not be invested. No, we will have the opportunity cost of that. So we'll be not able to invest those amount maybe in stock, maybe in new technology. That's the reason we have to make so it will be having financial consequences. So formulation business strategy, which we have discussed earlier. So it will help us to make the business strategies. So control, we will be having better control and all those things. So audit. So conduct internal business audit. So audit is something which helps us to say that a particular business is going in a is running in a way as expected. There is no any deviation. It is as per the laws and all those things. Next we have scope of management accounting. What is the scope? So management accounting helps in budgeting, planning and forecasting. So management accounting, as I told earlier, will take into consideration all the information, financial, non-financial. It will help in budgeting actually. So we can budget that this particular expenses can be incurred by us because we have such and such resources. It will help in planning for future. As I told, planning is very important in business. Then forecasting, we can, with the help of the management tools, we can forecast the future demand, future supply, whether we can meet this demand and supply. So management accounting helps in measuring performances. We have particular tools, we have transfer pricing, we have divisional performance management. By using all these tools, we can measure the organizational performances. So if suppose a particular, since the profit will be seen once the goods went out of the company, but there will be persons who will be giving their best in their particular department, say purchase department, say production department, say sales department. We have to provide incentives for them. For that, management accounting will help. For that, we have a concept, divisional performance management, transfer pricing. Next, comparing results and performance within and between organization. See, comparison can be done with two things. One is within the company, one is with other organization. Within the company, we have the concept standard costing. So we'll be comparing with the standard. Actually, with the standard, we'll see whether if there is any variance, who is the person responsible for the variance. If it is price, it will be purchase department. If it is usage, it will be production department. If there is less sales, it will be sales department. So we'll be making a overall analysis of the variances. Who has made the mistake? Who should be penalized? Who should be incentivized? And all those things. Next, assisting in the process of increasing effectiveness and efficiency. As I told earlier, the business should follow 3 E's: effectiveness, efficiency and economy. Economy is nothing but buying at a lesser cost of the same quality. Next, assessing the performance of past, future and capital investment. For this, we will be having concepts like economic value added. We will be having ROI, return on investment, return on equity, and all those will be having formulas, will be having certain tools to calculate all these things. Advising the decision about product mix, markets to be served, and selling prices. So in standard costing we'll be having the concept of mix variance, why there is a difference, who is the person responsible, what actions can be taken, and markets to be served. Management accounting helps in acquiring new markets, whether this particular market can we go into it. So if suppose Geo plans to enter into a new business, it will make a business plan, no, it will make a forecast whether we compete with this particular competitor. And the selling price is something very much important in this period, because everyone are making goods at a lower price. So for that, every company will be having a certain business processes to reduce as much as their selling prices. So in this we have a technique called target costing, where we'll be setting the selling price at first, the profit margin, then we'll be arriving at cost. We have to work towards attaining the cost of the product, which was earlier determined or fixed by the company top level management. Advising on decisions whether to outsource products, components, activities, and services. So we have to make certain decisions whether to produce in-house, whether to outsource. So outsource is nothing but we'll be telling some person, oh, you please make us goods, we'll be giving you the molds, we'll be giving you the design, we'll be giving everything, but the thing is you have to produce and give it to us. So we have to make a decision whether to outsource, because trade secrets will be shared, whether that particular person, can we believe him, does he has the responsibility of maintaining the secrecy or maintaining the quality of the goods, and all those things. Next we have advising on decisions involving investment of scarce funds between range of positive alternatives. See, in economics we have learned that resources are scarce but wants are unlimited. So a business aspires to become big, to be number one, but to achieve that we must have resources, no? The resources are very much important for attaining bigger goals. Now we having 100 rupees and planning for iPhone 14 Pro Max, is it feasible? No. How can you purchase? You can't even purchase a tempered glass on that, or a pouch for your iPhone. That's the reason we have to make a proper analysis. So next we have assisting in the making of a wide range of strategic decisions. Strategic decisions are mainly taken by top level management. So they are the person who will be making long term decisions. For that they need to have information. Strategic decisions are of utmost important. They will be like having impact for longer, maybe 10 to 20 years. So that one wrong decision can lead to a closure of a company. That's the reason management accounting helps in making better strategic decisions. So we have certain fundamental activities of management accounting. What are those? Calculating the profitability. This we will calculate for everything, even in financial accounting. Allocating cost to products. Allocating cost to products. See, a company has 4 products. Let's go through an example. See, company has 4 products, A, B, C, D. But we have certain one cost, that is 1000 rupees. So in traditional costing, used to divide it by labor hour. We will be distributing based on machine hour, but actually a particular product will not be consuming that product actually. See, we have R&D expenses of 1000. So this R&D expenses pertaining to products of BCD, but product A has not taken any R&D, but there is no requirement of R&D in a product A, but cost is incurred for BCD. Earlier what we used to do is we will divide it by labor hour, but labor will be working in ABCD. There will be labor in all the products, but R&D expenses is only for BCD. Earlier what we used to do, we will take it as labor hours, say A 150, B 250, C 350, again D 250. This was the basis of allocation in the traditional costing. Now after that we got a concept called ABC costing. In ABC costing, we will be allocating only to those departments which has actually availed the service or availed the particular cost. So in this case, in ABC, see, B has incurred 300, incurred 450, maybe 250. So this is not. So this is a wrong way of allocation. But in coming to part 2, it is a right way of allocation because he has not availed the R&D services. So my point here is that allocating cost to product, which means there will be efficient allocation of cost to the product. Next, setting interdivisional transfer prices. See, this is very much important because we will be having certain departments like purchase department, production department, selling department. Okay, these are the guys who will be selling to the customers, but even these two have made their work. No, they have made their work, even they have given their 100%. So while transferring, there is a concept called transfer pricing, which we will be learning later on. So they will be setting the management will be setting certain transfer prices, say from purchases to production at certain transfer price. So production department will work on the particular product, and they will be transferring by adding the transfer price received from purchase department plus their cost, plus they'll add their profit margin, then transfer to selling department. So in this way we can measure the divisional performances, whether this particular department is making profit or loss, whether purchase department is purchasing at a right cost, whether production department is using the goods of the purchase department and efficiently making products, whether there is any wastage. See, wastage is a loss to the company, no, that's the reason. Next, we will be seeing the evolution of management accounting. So the scope, I hope scope of management accounting is very much clear. So what are the scopes? Budgeting, planning, forecasting, measuring divisional performances, measuring departmental performances, comparison of results, and assisting the process with 3 E's. Please be aware of it. Then decision making, the computation of selling prices, whether to outsource or not, whether to make an informed decision as the resources are scarce, to invest in a particular business where we will be getting more higher rate of return, and all those things. Next, we will go to the evolution of management. So how did management accounting evolved? So in this we have 4 stages, 1, 2, 3, 4. First one will be always classical. Here this was the stage where we actually calculated the cost. So in the earlier stages we were not concerned with reduction and all those things. We were only concerned with cost determination and financial control. This is the important point here, please highlight it. So in the first stage we were only concerned with calculation of the cost. We were not concerned with how to reduce the cost, how to forecast, and all those things. See, at this stage the development of managerial accounting was oriented towards determination of cost. That's all. They were only concerned with determining cost and financial control of the business processes. And here the production technology was relatively simple because we were not having all those concepts, just in time, target costing, balance scorecard. We didn't have those concepts and all in the earlier stages. This was introduced at the later part. So second, we have the second stage. In this stage we came to the process of planning. So anyhow we were computing cost from the previous stage only. Now we came with planning. So Second stage is referred as the age of information for management, planning and control. In this, planning is important. Planning keyword is important. So in this phase was categorized by use of traditional accounting management technique that support decision making and responsibility accounting. In this, we introduce the concepts like standard costing and profitability analysis. So standard cost is nothing but comparing the standard with the actual cost. That's it. That is all about standard costing. So in this, management was focused on production process and internal analysis and paid less attention to external environment. They were not concerned with external environment. Third stage is the stage which we are practicing. We are practicing even today. What is that? Focused on reduction of waste resources. So in this stage, we were concerned about the wastage of resources. Now we came to the conclusion that no, we have to have a production process where there will be minimal wastage. We have to efficiently and effectively use our resources since the resources are scarce. So in this, we came with the concept of eliminating non-value added activity. So in this in the first stage, we were not concerned with cost reduction, but in this stage, they came with cost reduction and quality improvement. See, over the ages, there will be improvements. So in the first stage, we are only concerned with determination of cost because it was big thing back then. Later what we came with planning, forecasting and all those things. We came with standard costing. In this third stage, we were concerned with cost reduction. We were concerned with reduction of wastage of resources and all those things. So in this particular stage, please make a note of it. Cost reduction and quality improvements will be the main indicators. Next, we have the fourth stage. Fourth stage is a modern stage. Every concept came from here. See, there were many technological innovations. So in this, technology came into picture. As you can see, the time is 1985 to 2000. There was a boom in technology. So there was a gradual decrease in cost. There were new concepts, like in this we had JIT. JIT is nothing but just in time. Just in time is that we will be not storing the goods. When required by the production, we will call the supplier, tell him that please send us the goods we are producing. But for that, we should have a good relationship with the supplier. No, he should be sending goods on time. If there is a delay, production stop. We will be having opportunity cost. Next, we had target cost. See, target cost, as I told earlier, is nothing but earlier we had a concept like, see, earlier, how do we determine a price of a product? First we'll calculate all the cost, then we'll add certain profit percentage, then this will be selling price. This was the concept we used to do earlier. Now the condition has changed. We can't follow this concept. Now we are not in a monopoly business. Everyone, this is a competitive business, survival of the fittest. Who will charge less, they will be in the market. So now the price is calculated somewhat like this. First we will have a target price, then we will reduce a target profit. After that, we will be arriving at a target cost. So we are in a situation, first we have to determine the price. I am selling at this much. If suppose two company comes, Redmi and Samsung. So Samsung, see, Redmi now has acquired market, they will be setting as a price 20. Now same features, if Samsung wants to provide, they can charge at a premium price, but they can't, because if a normal customer who does not has brand knowledge, in a shop he'll tell that, sir, for Samsung you will pay 25. Same features in MI you are getting at 20. No, please pay 20.
because that person will be having more commission on Redmi rather than Samsung. So he will be telling, so please go with Redmi. Why do you want to pay 5,000 for the same features? So now Samsung is in a situation where it has to reduce price from 25 to 20. I am taking this example. Please don't be. I am not considering the brand value and all. The brand, Samsung is a brand. It can make a premium pricing. But for this example, please consider that now Samsung is in a position. Let's take not Redmi. We'll go with Oppo, Vivo. Oppo, Vivo will be having same. So Oppo is a correct example. So same features Vivo is providing at 20. Same features can Oppo provide it at 25? No, it can't, because same feature Vivo is providing at 20. That's so now Oppo has to set a target price which is 20,000. It is because of Vivo, but Oppo has to determine its profit. No, say 15%. So 15%. So Oppo will be having certain profit percentage. It has to maintain that. So after that it will be arriving at a target cost. So now Oppo is bound to make a product at 17,000 itself. Whether it follows just in time, whether it follows any other method, but the cost should not increase up. The cost should not be above 17,000, because the competitor's price is 20,000. We can't go up over and above that, because we are not a premium product. No, there are products which are premium, like the Apple iPhone. You can't beat them. They are in the premium segment, but these are all on the same segment. No, that's the reason we came up with a concept called target costing. In the fourth stage, balance scorecard. Balance scorecard is like an analysis. We will be analyzing the financial wise, employee wise, business growth wise. Okay, next we have value chain analysis. Value chain analysis, in value chain analysis is nothing but we will be having two activities. One is the value added activity, one is the non value adding activity. Value adding activity are those activities which provides value to the business. Processing or production, it has to be done. We can't ignore processing, production, no. But warehousing, we can avoid it. How do we avoid it? We can send it directly to customers, no, without storing. There are some products which does not require storing. You produce, send it out. You produce, send it out. These are certain non-value added activities which can be avoided. See, there are certain businesses which does not require warehouse. But we are simply producing and keeping in warehouse means it is a cost for the company. No, the company can reduce the cost. Instead of warehousing it, it will make products as required, as per the market demand. It will produce, send it out, produce, send it out, and instead of storing in the warehouse. So there comes the picture of value chain analysis. We will be identifying those activities which provides value to the business. We will keep it. Non-value activity, we will send it out. We will be taking it off from the business process in order to reduce the cost. So these are the phases in the evolution of management accounting. So if you will have a summary. So in what did we do? What was the first stage? So it was basically determination of cost and financial control. In this particular stage, we were only concerned with determination. That's it. We are not concerned with any other thing. But next, we went for planning. We went for control. We went for standard costing. We were seeing profitability analysis and all those things. Later, we came with efficient use of resources. We tried to use the resources in efficient way to reduce the wastage of resources. Wastage of resources is a loss for a company. That's the reason we have to use our resources effectively and efficiently. Later we came up with creation of value. Creation of value. Every business should have a value. So in this world, there are certain companies, a single person cannot even touch them. Like the BlackRock. The BlackRock company holds they'll be having shares in every big companies like the Amazons, like the Google, Google's parent Alphabet, the BlackRock has holding in every company. It has the power, like we have White House in America. The power of White House and BlackRock are same in the corporate structure. The president of US, the CEO of BlackRock, they have the same powers. If the CEO of BlackRock, if he tells something it should not happen, it will definitely not happen. He has the power. He has the decision making power to control the entire globe. Literally, he has, because he is having shares in every damn company. Every damn company. He is having shares in Amazon. He is having shares in Google. These companies are anyhow controlling the globe. The BlackRock is controlling these companies, like by purchasing their shares. See, that's the reason. Now value creation is very much important in this century. So these are the stages of management accounting. So now here we had this is the summary, what and all came in that particular stage. See, if you go through the first stage, it was initially concerned with determination, cost determination, later planning and all those things. See, in the last stage we had value chain analysis, PEST or SWOT analysis, strength, weakness, opportunity, threat, customer profitability, whether a particular customer is profitable and all those things. Next we have the relationship between management accounting and cost accounting, management accounting and financial accounting. What is the relationship between these two? That we have to understand, no? See, first we'll have financial accounting and management accounting. So what is financial accounting actually concerned about? Is it concerned about decision making? No, right? Is it concerned about company? But it is like a static job. Like it will make the accounting entries. That's it. It is only concerned with accounts. That's the reason. So it will be for a point of time. Now we'll be making balance sheet P&L for a particular time. That is the year end. After that, gone. Why do we want a financial accounting? After that, we'll be preparing new financial statements. So financial accounting classifies, analyzes, records and summarizes only the financial transaction. In this particular thing, it will consider only financial transaction. It is not concerned with non-financial information and all those things of a particular time. But when you come to management accounting, it helps the management to make effective decisions. Management accounting actually makes effective decision making. For that, it requires financial information. For that, it requires cost information. So management accounting is like a big bucket, as I told. In that bucket, we'll be having financial accounting also, cost accounting also, qualitative information also. Next. So what is the purpose of financial accounting? So this was my first point in this chapter. Financial accounting was only concerned with two things: financial position and the financial results. That's it. See, financial accounting reflects the true and fair picture of the financial affairs. Financial affairs is nothing but financial position. I'll write it as like this. So, position and the result. So whereas what does management accounting do? Management accounting helps to take meaningful steps and strategies. It is a larger picture, that's all. So scope. Financial accounting is only concerned with financial information, but management accounting, does financial accounting has management accounting? No, the answer is no, because financial accounting is only concerned with financial, but management accounting is a bigger bucket. This bucket has financial as well as cost. That's the reason. So the scope is broader here, the scope is pervasive here. So next, as I told, financial accounting is only considered as quantitative, but here it is big qualitative and quantitative. Does financial accounting require any information from management accounting? The answer is no, because it will take information from the business itself. But management accounting requires financial accounting's information. There is a dependency of management accounting on financial accounting. See, that's why it is not dependent. So it is dependent on information of financial accounting and cost accounting, because it will make decision at a larger level. That's the reason financial accounting will make at a it has a narrow space, because it is giving only financial information. It is not giving qualitative information. That's the reason. Then statutory requirement. Are we statutorily required to prepare balance sheet and profit and loss account? Just make a guess, no? Are we legally required to prepare balance sheet and P&L? Do we have any other acts? As per act, do we have to prepare? The answer is yes. Yes, we have to prepare as per the Companies Act. We have to prepare as per the Income Tax Act. We have to prepare on a particular date. In India, it is 31st March. We have to prepare a balance sheet and P&L for the period ending on 31st March, and we have to provide the results to the government, to the departments. But management accounting is for ourselves. There is no statutory requirement, because management accounting we will be doing. No, the government is not concerned about how you make decision on all those things, but it is only concerned with the financial numbers. That's it. So format, financial accounting has specific formats. We have format for P&L, we have format for balance sheet, we have format for other accounts. But in management accounting, we don't follow such formats. Whatever format you make, it will be the format for your understanding. The format which you make, it should be understandable, and it should include all the information. That's the reason. Who will be users of financial accounting? This was the first part of the class. Investors, regulatory authorities, owners, creditors. But who is the user of management accounting? Only the management. So these are the differences between financial accounting and management accounting. Please mark it as important. A question can be asked directly: what is the difference between financial accounting and management accounting? Next, we are going to the next topic, which is the difference between cost accounting and management accounting. So here we'll be having similar point of differences like the financial accounting. See, this scope, it is narrower, here broader. Quantitative, both. Statutory requirement, same. So as per Companies Act, we have to prepare a cost audit report if the turnover is the prescribed limit, if it is a particular company. Dependency, see, cost account is not dependent, here it is dependent. So used by stakeholders. See, this point is same, this point is same. Yeah, this one is same. So we have 4 similar points. So if you read that one, here you have to learn what? 4 to 5 new points. That's it. So what is cost accounting? As I told earlier, it will be only concerned with cost computation, reduction and control. That's it. It is not concerned about any other things. But management accounting helps in making decision making. So this point is same. See, applications. As I told earlier, management accounting offers a bigger picture. How it will take into consideration of financial plus costing. That's why cost accounting. That's the reason it has a larger picture. But cost accounting is nothing but prevents a business from incurring costs beyond the budget. That will be having certain budget. We have to be within the budget. See, cost accounting is one of the many subsets of management accounting. Management accounting is a universal subset. See, as I told earlier, management accounting has everything. It includes cost, it includes finance, it includes qualitative information. Does cost have it? Cost accounting have financial accounting? No, that's the point they are making here. So these particular differences are easy because we already studied financial accounting and management accounting. So there are 4 similar points, only we have to add 3 more points. That's it. These are the relationship between cost accounting and management accounting, and so these are the differences and relationship between financial accounting, cost accounting with management accounting. So we have covered all those things, I guess, I hope. Next we have role of management accountant in the modern business world. So what is our role in this modern business world? What does the business expect us to do in this modern business world being a management accountant? So first thing is planning and accounting. So what is planning and accounting is that management accountants prepare a accounting system covering cost, sales, forecast, profit planning, production planning, allocation of resources. It should also include capital budgeting, short term, long term financial planning. They also prepare procedures necessary to implement the plan. See, since we are equipped with all the tools, management accountant is a person who is that he'll be having all the techniques as discussed, like the target costing, balance scorecard, just in time. He knows every concept. The thing is, he has to give a plan to the business. Please implement this. If this is such a person, now we are having heavy warehousing cost. Please implement just in time. We are not the price of the product is very high than the competitors. Please implement target costing. So he will be suggesting ways to make the business even more competitive. Next, controlling. Management accountant assists in control of an organization performance through use of standard costing, budget control, accounting ratios, fund flow statement. See, how do we control a business? For that, we should have a budget or a standard. So if there will be actual performance. So in a month, say take April month, we had post a budget that we have to achieve this and this sales, this must be the cost, this must be the profit. So we'll see the actuals on May 1st or maybe May 1st week. So if there is any deviation, there is a problem. So that's the reason management accountant is involved in the role of controlling. For that, he'll be using tools like standard costing, budget control, accounting ratio, fund flow statements, cost cutting initiatives, and assessing capital expenditure proposals. See, when we are making a capital investment proposal, we have to be damn sure, because it will be like heavy cost on the company. We have to see whether we can purchase a good or rent it out, or can we rent. So if renting is good, go for renting. Why are you purchasing a 2 to 3 crore machinery when it is available for rent? You have to make proper analysis whether renting is viable, whether the rent is less than the installment, and all those things. Do we have any other expenses and all those things. Next, we have reporting. So management accounting will be reporting to the top level management of all the management decisions. Like if there is any adverse events, we have to make a report to the top level management. Who are the parties responsible? What is the action taken? What is the loss to the company, and all those things. Next, we have coordinating. What is coordinating? Like, see, management accountant, the purpose of management account is to have a proper coordination in the business. How will he do this? So he'll do this by having tools like budgeting, financial reporting, financial analysis, interpretation, and so on. So he'll be making budgets. And coordinating with the particular department. So he'll be having particular departments, no? So by that, he'll make budget for a purchase department. Please purchase by this price. Please don't go over and above this budget. So he'll be coordinating things with the department. Next, we have communication. So communication is that he'll be providing wide range of reports. So by using this report, we can compare our company with outside company, our company's one department with other department. So it will be helpful for comparison, maybe communication to the top level management about the organization's departments. Next, management accountant helps in tax administration. See, management accountant are in charge of tax policies and processes. They make reports that are required by various authorities. Further, they ensure that quarterly tax is required by the relevant act to prevent payment of interest. See, it is not actually a job of management accountant, but the management accountant has to take into consideration the tax administration, because we'll be having certain monthly payments, say GST, it should be paid by 20th of the following month. Say TDS, it should be paid by 7th of the following month. If there is a delay in payment, we'll be incurring two costs. One is the interest, one is the penalty. If the penalty is minimum, we can pay penalty and interest. If it is high, there will be loss of working capital. No, we'll be having incurring a loss for no reason, for our fault. That's the reason management accountant will be analyzing all these situations. Evaluation of external effects. We'll be having certain external effect, no, like see government policy and existing laws. So government makes a law that something that we are practicing is void. It will be not legal from tomorrow. So management accountant should be very much aware of this. So that's the reason he has to check whether it will affect the business goals, the impact of these external factors on business, and report it to the stakeholder to take necessary precautionary action. So if we have any adverse effect on our business, we will be reporting it to the top level management that, sir, this is the law coming from tomorrow, this will impact us like this, so please make a decision. So the top level management will take the decision based on the information received from the management accountant. Next we have asset protection. Like as discussed earlier, we have to protect our tangible and intangible asset for smooth run of the business. See, management accountants prepare fixed asset register for each type and provide internal checks and control to protect the company's asset. They also create rules and regulations for each type of fixed asset and get insurance coverage for all types. See, fixed asset are those which will be in business for more than 1 year and will be, with the help of it, will be earning revenue. So the cost will be huge. That's the reason we have to place proper internal controls, that a particular person will be only allowed to touch this asset. Other than him, nobody can touch. We will be having certain internal controls. Next we have economic appraisal. See, when the government makes regular announcement about the country's economic situation, management accountant is interested with making economic study and determine the influence. So it is like this. If suppose a COVID lockdown announced, will that affect our business? Management accountant is responsible. He has to make a report that if COVID lockdown is imposed, we will be having such and such a effect, sir. So in this particular situation, COVID has impacted by, we will be shutting all our shops. There will be no revenue. We have to make other means, like we have to go to e-commerce. We have to deliver goods through e-commerce sites and all those things. So these are the functions of a management in this business world. He has to take care of planning, accounting, controlling, coordinating, communication, reporting, financial evaluation and interpretation. So I guess we missed this point. So management accounting will analyze the data and present it to the management. That's the normal thing. In a non-technical approach, together with their comments and ideas, so that shareholders sees there will be certain terminologies which the shareholders will not understand. If I use a terminology which we understand, if he is a technical person, maybe he is an engineer, he is a doctor, how will he know the meaning of depreciation? We have to tell that, no sir, the depreciation is in charge on fixed asset for the normal wear and tear. So by simplifying the terminologies, management accountant will make the better interpretation. Next we have tax administration, evaluation of external effects on the business, economic appraisal, protection, asset protection. So that's the end of role of management accountant in business world. Over and above that, globalization, which is a very big term in this century, has made management accountant to have many more functions. So he has to take into consideration the globalization part also. So first thing, he has to face global competition. See, global competition is nothing but, earlier we had one space. Take a village. Someone used to produce there only, someone used to sell there only. Later they moved on to cities. They used to produce in their village, take it to cities. Now the boundaries have been reduced. So now it is like they were selling all over India. Now the situation has changed. Now Indian goods are entering foreign markets, foreign goods are entering Indian market. So management accountant is responsible to make at such a price, at such a quality which will beat the global competition. Now we are nowhere competing Indian business. We are in a situation we'll be fighting the global entities. That's the reason management accountant is very much responsible to make all those decisions. See, let's go through it. Prior to the era of globalization, many organizations operated in a protective competitive environment, which means that this village people should not go there, that village people should not come here. So we used to have a like agreement that we will not come to your village, please you don't come to our village. By this they were having a protective agreement that either of the company's profit will be affected. Now this is that is not the case. Now we'll be having global competition. Now globalization ushered in the changes where there have been reduction in tariffs, duties on imports and exports, as well as dramatic improvements in the transportation and communication system. This has facilitated firms to operate globally. So now American company can come into India and sell, like the Apple, and resulted in a stiff competition from the very best organization worldwide. So now we are getting a very stiff competition. There is a cutthroat competition between the business entities. So customer profitability analysis and value chain analysis are important issues. So see, customer profitability analysis is that, see, A is a customer. Okay, so A will purchase for 1,000 and he'll ask service for 10,000. Is that customer profitable for us? No. If suppose a customer has purchased 1 lakh goods, maybe a AC, maybe a TV, but he'll ask service for only 10 to 20k. The cost of serving that particular customer is 10 to 20k, and he'll be making changes. He'll be giving his old item, purchase new item, like the buyback. The company is buybacking at a lower price. So this customer is profitable. So business has to take into consideration all those things. Value chain analysis, as discussed, we will be having only the value added activities and ignore the non-value added activities. Next, changing product life cycle. Earlier we will be having a big lengthy product life cycle. Now with the advent of technology we have reduced, we have condensed the processes. See, let's see here. Changing profile of a customer along with the behavioral issues have contributed to drastically reduce the product life cycle. First mover advantage is critical, and every organization is desperately seeking the advantage by increasing their investment in research and development. By investment in research and development, they are reducing the cost. In this respect, the management accountant plays a crucial role. In order to compete successfully, companies must be able to manage their costs effectively. The role of management accountant is to manage the cost effectively and efficiently at the design stage, have a capability to adapt new environment, different and changing customer requirements, and reduce time to market new and modified products. So see, nowadays changing a small part of a machine can give a new product. So that's the reason by the technology we can inculcate in our business, in the production process. By making small change we can get greater output. Greater output will lead to greater profitability. Next we have advances in manufacturing technology. It is that there are many changes in manufacturing technology. Earlier we had labor intensive techniques, like labor are expected to do everything. Now labor is replaced by machine with technology nowadays. So this has made the cost less, but anyhow the labor have lost their jobs, but for company, as a company perspective, it has reduced the cost. Let's read important things in this. In order to compete effectively, so in order to compete, the companies must be able to manufacture high quality innovative product. Same product is no use now, because anything innovative in the product needs to be done. If it is the same pen, if it is the same pencil, who will buy? If there should be a pencil, there should be a eraser on top of it, there should be a pencil. These are the innovations. These are simple innovation, but it will lead to a greater profit at a lower cost and also provide first class customer service. So now customer service is very much every business is more concerned about customer service, because retaining the existing customer is tough, and over and above that you have to acquire new customers for better profitability. Existing customers will serve the existing expected level of profit, but new customers will add more profit to the business. That's the reason for providing first class customer service. Then we have techniques like just in time, focusing on quality, simplifying process, and focusing on advanced manufacturing technology. So just in time is nothing but purchasing goods when required by the production instead of storing it in the warehouse. So impact of information technology, IT. This is very much important because IT technology support business activities has increased dramatically. The e-businesses, see, through e-businesses, now a company producing goods in Karnataka are able to serve in far northeast because of e-commerce and all those things, e-businesses, internet and all those things. So management accountants have now become more involved in interpreting the information received from the accounting system and providing business support to the managers. So management accounting has business objectives. Over and above that, he has some environmental objectives also. He has to protect his environment. He has to make processes which does not harm the environment from the business, like the letting out the waste chemical to nearby river. These are not expected. They will be heavily fined nowadays by the government. See, the environmental costs are often high in many manufacturing, because if there is one bad thing done to the nature and noticed by the government, it will be like hell for them. They will be penalized heavily by the courts and all, the green tribunal and all those things. Regulatory requirements often impose huge fines for non-compliances. Companies are increasingly realizing that being socially and environmentally responsible improves their image. So if suppose a company is making bad to the nature, they'll be having if suppose they had a good image, by doing this one particular thing, they'll lose out their brand image. It will be, this in turn leads to reduction in revenue also. They'll be losing their market share due to this one bad thing done to the nature. Next we have deregulation and privatization. Prior to the era of globalization, companies in many industrial sectors were government owned, like the Bell, like BSNL. Even today they are owned by the government. There are certain industries which are outsourced, like the Air India. It was earlier in control of government, now it is given to the Tatas and operated in highly regulated and protected non-competitive environment. Thus the organization, especially those incurring losses, were not under any pressure to improve quality and efficiency of their operations and to improve profitability by adding and dropping particular products and services. So there are certain industries like BSNL, they won't be working, but they'll be getting salary. Even though the company is making losses, government is trying to fund BSNL, because in the private sector we have only 3 players: Jio, Airtel, Vodafone Idea. We have 3 players. So since there may be chances of charging enormous price to customers, government is trying to protect BSNL. So improve BSNL in this by giving them funding to compete with these 3 telecom operators. So privatization is like the government transferring its ownership to a private entity. How Air India was transferred from Government of India to the Tatas. Okay. Next we have focus on value creation. Now Now any company which needs to sustain has to have a brand value. Value creation is very much important in this century. See, let suppose if you are doing very well in business but having a wrong brand image is of no use actually. That's what I meant to say here. So value creation is very much important. See, the scope of management accounting is enormous. Managers who are in charge of the intangibles. Intangibles is that we should have a good brand value, so that in terms it will be converted into patent, maybe goodwill, trademark. These are the things which company has. So if there is a wrong image, maybe wrong image on the company, it will be very bad. Next, customer orientation. So as I told earlier, retaining the existing customer and acquiring new customers is what expected from a business. So retaining existing customers includes providing better services, after sales services, taking feedback from them, improvising the business process to satisfy the customers, and other things. So in coming to the new customers, we have to showcase our business in such a way that the new customers is attracted towards us. He should feel that okay, this company is better than that company, I can go with this, they are providing better customer service. So for this, management accountant has the responsibility to make a process where it will attract the customers, new customers, and retain the existing customers. So management accountant role in the era of globalization includes all this. He has to face global competition, he has to be in charge with the product life cycles because it will be changing every now and then. He should be well informed about the information technology, new manufacturing technologies. He has to take care of the environmental issues. He has to take chance on deregulation and privatization. He must be focused on value creation and the customer orientation. By this we have completed chapter 1. So we'll go through a quick summary of it. So initially we started with the meaning of accounting. What are the meaning of accounting? What is the meaning of financial accounting? Then we went who are the users of financial accounting: the owners, the creditors, the regulatory authorities, the management, the government, the research institutions, the employees, and all those things. Then we came to the meaning of management accounting, the users of management accounting. So the users include for making strategic decision, for planning operations, for determination of capital structure, and all those things. So formulation of business strategy. Then we went to the scope of management accounting. When do we use management accounting? So it includes budgeting, planning, and all those things. So comparison of results within the organization and outside the organization, in assisting in the process, like the efficiency and effectiveness of processes. So and future investments, fixation of selling prices, whether to enter a new market or not, and wide range of strategic decisions. So next we went to the profitability of the whether management accounting helps in profitability of products, allocation of cost like using the technique like ABC and all, setting interdivisional prices and all those things. So later we went to the evolution of management accounting, where we had four stages. In the initial stage it was only concerned with determination of cost and financial control. In the second stage we were concerned about the planning. So there lies the concept of, where we introduced the concept of standard costing, profitability analysis, and all those things. So in the third stage we were more concerned about the wastage of resources. So we were implementing new processes to effectively and efficiently improve the production process to reduce the wastage of resources to a lower level. And so we had a concept of value added activities and all those things. In the fourth stage, which is the final stage, we were concerned about value creation. We were concerned about value creation and the technological innovations and all those things. There we started with the concept of just in time, target costing, balance scorecard, and all the value chain analysis and all those things. Later we started with the relationship between cost accounting and financial accounting with the management accounting. We saw what are the differences between the financial accounting and management accounting, the differences between the cost accounting and the management accounting, what are the relationships in those things. Later we came to the role of the management accountant in the business world. What are his functions actually? The functions are planning and accounting, controlling, coordinating, communication, reporting, tax, financial evaluation and interpretation, tax administration and all those things. And management accountant role in case of globalizations, to face the global competition, so changing product life cycles, and the impact of advent of information technology, new manufacturing technologies, customer orientations. And we have to the role of management accountant in the environmental issues and all those things, and he has to focus on value creation and all those things we had covered. So by this we have completing chapter number 1. So in this, if I want to tell the important things, important points in this chapter would be scope of management accounting and the uses of management accounting. Evolution can be taken as B category, but scope will be A category. Then relationship between cost accounting or financial accounting with the management accounting is A category. They can be asked directly the differences between, and the role of management accounting can be taken as A category A. So by this we have completing chapter number 1. So please guys, please try to solve the multiple choices. So it will be all basic kind of thing. So yeah, by this we have completed chapter number 1. So we are left with 9 chapters. So this introduction is very much of theoretical chapter, so it may be boring while reading. So I suggest you to read all the important points for examinations, so that it will cover everything. So done for the day now. So next, so what do you guys plan is that please try to revise daily, as I told in starting of the class. Please try to revise daily and make pointers. Like please make summary notes and paste it on your study mat. Instead of reading the whole content, please read only the summary notes. It will be very much helpful for during the examination, since we will be having less time. Okay, summarizing, revision is one thing. Please try to practice by writing, because in exam you will have only restricted time, 3 hours. In that you have to complete. So please try to have a good handwriting. So practicing daily will make you to write, it will help in exam to write very fast, to understand the things, because there will be some questions which cannot be answered. Instead of wasting on that, we can write the known answer in a very better manner, better presentation. So presentation matters very much in examination. That's the reason please follow proper presentation. So while doing sums, anyhow I'll be telling you what is the presentation for particular problem, what are the working notes and all those things. So by this I'll end the class. By telling that please read. So please try to clear every exam in very first attempt. The respect for a first attempt guy you don't know in the market is very much high. That's the reason please try to clear every exam in very first attempt. So thank you guys. Let's see tomorrow.